My name is Bruce Bockenheimer. I'm a member of the board of the MIT Enterprise Forum of New York City and a past chapter chair. And in my day job, I'm a clinical professor of management at Pace University, the director of our entrepreneurship program, and a faculty fellow of the Wilson Center for Entrepreneurship. My main area is entrepreneurship and international business. Before, in a previous career, I had worked in a number of foreign banks and for a technology company doing business in about 24 countries. Most of all, I'd like to thank and welcome our panelists. Valerie Demona, partner at Pepper Hamilton, Ruth Lanther, a partner here at Holland & Knight, Greg Rourke, the CEO of Navigate, and Pramod Saxena, the founder of Flytel Ventures.
Good evening, everyone. I'm Valerie Demona. In terms of my background, as you can probably tell from my accent, I'm French. I was born, raised, educated in France. I've been practicing law at Pepper Hamilton for now almost 5 months, and practicing law in New York for about 15 years. My practice has, over the past 15 years, covered a range of areas. I've done a lot of work in mergers and acquisitions, and particularly focused on international work. Focused a lot on Europe, France, Germany, Luxembourg, the UK. Also focused a lot on Asia, where I've done a fair amount of work in China, Macau, and more recently on India. At Pepper Hamilton, I run the India practice of the firm, and my practice is both inbound as well as outbound. I'm also a capital markets and securities lawyer. I've done a number of IPOs during those years when there used to be IPO work. I've done a number of securities offerings, in particular high-yield bond offerings, again, when there used to be high-yield bond offerings. These days I spend most of my time working with India. India has been a bright spot on the horizon in terms of cross-border work. I'm currently working on 4 different kinds of transactions in India. One of them involves an acquisition by a US company of an Indian business in the information technology space. Another one involves the sale by a large Indian media conglomerate of a subsidiary to a US media company. Another one involves setting up an investment fund that will invest into India publicly traded securities. And the 4th one is basically advising a company in setting up a greenfield operations, again in the IT space, servicing the insurance sector in India. So as you can see, I cover a variety of industries. I've done a lot of work in the outsourcing space, where I've had a couple of outsourcing, India-based business process outsourcing companies. One of them I took public, that was the Excel Service Holdings. And I've done also a fair amount of work in the media, as well as technology and IT space.
Great. We need to talk later. The Excel project is a great one. My name is Greg Rourke, and just the quick background is I wasn't smart enough to go to MIT. I ended up going to Brown and Harvard instead. I was a Brown undergrad, and then went to Chase Bank, and then Harvard Business School, and did a number of projects throughout the 80s, mostly for VCs and some educational things and technology-based things. And then in '88, I was asked to join Danskin as CEO, and did that for 4 years. We had a dramatic turn for a variety of reasons. Great team, and we were able to get back the market share that should not have been lost in the first place. After 4 years there, we took it public, and then I was asked to take over at Kaplan Test Prep for the Washington Post. I was CEO there for 2 years, and during that time, I was going to say at Danskin, as it mentioned in that overview, we tripled our sales during that period of time, and really how we approach the markets, the team we put together, I think would be of particular interest. And then at Kaplan, when I arrived, it was a very successful company for 50 years. In fact, there's an old saying, whom the gods want to destroy, first they send 40 years of success. And this company had exactly 40 years of success, and then was beaten up by the Princeton Review. But when I got there, they had never run a score claim study, never figured out how much your score went up, did not do books, and were only operating in 2 international markets, Korea and Panama. And by the time I left, we had a full range of books, We had Price Waterhouse endorse a full range of score claims, and we were operating in 13 countries and had a very dramatic turn. Virtually the same team that we put together there, and as I was going to say, it's in the turnaround world, it's never an I turned around this, it's always the team. And we put together a great team there. And then did a number of telecom related deals in the mid-90s, and did a B2B incentives company, bought a company in Atlanta. And then we've got somebody in the background I'll introduce. Sandy Cohen is here as a founder of a software company called Ergo Training. Did Act for Lotus Notes, and he sold a few 100,000 seats. And then Sandy asked me to join as an investor and a board member, and then later on that was the predecessor company for Navigate. In the last 13 years I've been a professor at Columbia Business School teaching the restructuring course, and it was always a popular course because John Whitney developed a tremendous class between 85 and 96, and I took it over after that, but it's become particularly popular in this economy. Students using all their bid points to get in, but it's obviously a hot area. The current incarnation of the software company Navigate, I think what we've shown is that we have 200 employees, 220 employees, and 200 of them are in Chennai, India, and Minsk, Belarus, and 20 are in the US. So even at our size, $10 million company, we have very large clients in multiple markets: HSBC, New York Life, Mass Mutual, Mutual of Omaha, and we've got particular lessons there about how small and growth companies can take advantage of markets. So, with that introduction.
Well, thank you, Greg. Well, I just like Greg, if he doesn't mind me putting myself in the same company. I also was not smart enough to get into MIT, but I did go to Yale. I was in the first co-ed graduating class and graduated with Mitch Kapor from Lotus. So he would play Frisbee an awful lot, and we knew he was real smart and everything, but then when we started seeing that he really found his niche, we knew that we had been in good company. And then went on to NYU Law School. Spent 27 years at the firm of Gilbert, Siegel & Young. We merged 8 years ago with Holland & Knight. And really to have the kind of platform that we do have here with about 1,100 lawyers and 17 offices, plus 2 outside the States, one in Abu Dhabi and another in Beijing. And through those 2 offices, I've obviously been involved with both inbound and outbound issues in those particular jurisdictions. My background has been primarily with cross-border transactions, a significant number with Europe. I'm actually doing one now right now with Russia. But I think it's also interesting to see in the course of over 30 years of what is considered an emerging or growth company. And back in the mid to late 70s, I did work on for a company called Nokia, and they were still making rubber tires at that point. And they even spelled them Tyres. And then, of course, decision was made to maybe focus on a different area, and notwithstanding some of their recent disappointing sales in the States, they're here to stay. So I just mentioned that as by way of a little background. Just a few weeks ago, I was in Madrid at the annual International Bar Association meeting. Richard Raisman, my partner here, who's one of our great technology gurus, has been a long-standing member as well and been a chair of the technology committee there. I chaired a session on government regulation of foreign investment, basically legal restrictions on purchasing inbound companies in various jurisdictions, like our Exxon Florio Act that restricts foreigners from buying companies where there may be national security concerns. And I had the U.S., I spoke for that, Canada, Australia, Brazil, UAE, China, Germany /EU, and India represented. And if I could come away with one takeaway, it is that everybody kind of was falling all over each other to say they're the most liberal, open environment. So on that note, it's interesting that in times of economic challenge, protectionism at least is not what the lip service that's being given. Everybody wants money coming in, everyone wants to create jobs, everyone wants to be ahead in this environment. And so hopefully we're going to drill down a little bit on to what extent that's true, which countries make it a little easier, which ones there are issues that still challenge us going forward.
Good evening, everybody. My name is Pramod Saxena. I started my career as a chemical engineer and moved in every industry other than chemical industry. So built different projects, oversaw the operations of businesses. Was CEO of SR Group, which is a large conglomerate in India, and with interest in steel, shipping, oil and gas, power generation, telecommunication. I headed their telecom business, built the business from scratch in 1994 when Indian government liberalized telecom industry and issued licenses to private sector for the first time, and we built the first mobile network in the city of Delhi. After building the business for SR Group in telecom over the northern region of India, I moved to Motorola as CEO of Motorola's business in India and SAARC countries, as they define the neighboring countries around India. 6 years, Motorola business operations in India, we started with a single network, had a 40% share of the market in 6 years' time in infrastructure, of course not the mobile phone, but Motorola had heavy reliance on Indian market both for their business as well as the software and services support. In 2004, I was bitten by the bug, entrepreneurial bug. Felt that I have built different businesses, done cross-border transactions, did equity transactions, mergers and acquisitions. I said, why not build my own business? And I embarked upon a project that was very unique, given that Indian market was growing very fast on the mobile telephony, and that it was almost going to be the main business for the country for the next decade. We said that if we can connect with this industry and connect people at the grassroots level to get the benefit of mobile telephony through various services, I formed a company called Oxygen. This company aggregates services on a single platform and creates connectivity with retail. Indian business is primarily run by mom and pop stores, unlike modern trade in most advanced countries. So we created connectivity at retail points through various means of connectivity, wireline, wireless, internet, everything using various means like POS terminals or web or ATMs and mobile phones simply. So this web of connectivity is now across 17 states out of the 23 in India, and we hope to, in the next 2 years, complete our connectivity all across the region with more than 200,000 connect points. That will bring us, will give us the ability to connect with nearly 50 million people on a single platform. At the same time, we also developed a wallet, which everyone is very familiar, like a PayPal. We created a PayPal equivalent in India with funding at retail using cash. So subscribers of mobile phones who do not have bank accounts, who do not have means to transact with their money other than in cash, can now have a virtual bank account through their mobile phones and can pay for and access services from their mobile phone. So the mobile phone becomes their bank account. This also helps in creating a bank-like infrastructure, virtual bank-like infrastructure across the length and breadth of the country, where 80% of the people don't have bank accounts. This venture was founded as a partnership with a company from South Africa, where some pioneering work had already been done in prepaid electricity, etc. 2 years after founding this venture, Citibank invested in it. We needed money, and we needed money to expand and grow. So Citibank invested with us last year. Microsoft Corporation bought 36% equity in this venture and gave us further leverage to create more innovation and bring new products to the market to leverage our connectivity. So this company is now the foremost and the biggest company in India that is poised to exploit the mobile payment space and in the space of value-added services on mobile. Alongside, I was working on another venture which is called Phi Televenture, the name that you can see here. I founded this company about a year back. Idea for this company was primarily to create a platform that can support interests of large international corporations who may want to do business in India and do not have enough understanding of the market environment, of the regulations, procedures, cultural aspects, the organizational issues. So I brought together a team of 4 CEOs, including myself. The other CEOs are one who was leading Alcatel-Lucent, another gentleman who was heading Reliance Telecommunication, and one who was heading Coke. So 4 of us formed this venture to provide an opportunity for international companies to associate with us to help, and we would help them incubate their businesses and earn sweat equity through this involvement. So it's not an advisory firm alone, but it's a firm that will partner with the international companies to help them incubate businesses and handhold them in the initial years, which are normally the most difficult years for the business. So these 2 ventures are my entrepreneurial stints, and I'm also creating one more company which will be in services space for telecom operations called Managed Services. Yeah. Thank you.
Okay, thank you. One of the first questions that comes to mind when people are thinking of doing business internationally is which country should I look at? And one of the big topics when talking about the emerging markets is the difference between different countries, specifically the fast-growing BRIC countries, Brazil, Russia, India, and China. And I thought I would read a quote from Thomas Friedman. He's a New York Times columnist, also author of The Lexus and the Olive Tree and the World is Flat. From 2005, but it's still quite relevant and interesting. He says, every time I visit India, Indians always ask me to compare India with China. Lately, I've responded like this. If India and China were both highways, the Chinese highway would be a 6-lane, perfectly paved road, but with a huge speed bump off in the distance labeled political reform. How in the world do we get from communism to a more open society? When 1.3 billion people going 80 miles an hour hit a speed bump, one of 2 things happen. Either the car flies into the air and slams down, and all the parts hold together and it keeps on moving, or the car flies into the air, slams down, and all the wheels fall off. Which will it be with China? I don't know. India, by contrast, is like a highway full of potholes with no sidewalks and half the street lamps broken. But off in the distance, the road seems to smooth out. And if it does, this country will be a dynamo. The question is that smoother road in the distance a mirage or the real thing? So I thought we would open up a discussion to the panel with their thoughts on comparing Brazil, China and India, where we have some expertise, and other emerging markets as well.
I guess since I'm holding the microphone, I'll go first. But let me first mention that in terms of China, that September 22nd, just a month ago, U.S. Council for International Business, which is composed, it's a U.S. organization, it's a trade organization, it's about 300 businesses, responded to the U.S. Trade Representative's request solicitation for comments as to whether or not China was complying with its WTO obligations. It's pretty thick, it's about 60 pages. If anybody wants a copy, if you leave me your card, I'll be happy to email and forward a copy to you. It is really a wonderful compendium for anybody who's looking to go to China. And I don't think it whitewashes the situation. There's enormous opportunity, but there are tremendous difficulties still. And first one being intellectual property rights. And that is still an issue, both in terms of sufficient legislation, enforcement, And so that I still would highlight as probably one of the biggest issues facing anybody going into China, as well as issues of transparency in terms of just how the process works. Nonetheless, there are companies that are making a real go of it. Our office there is busy. People are doing things. We're seeing both local businesses and obviously U.S. and throughout Europe coming in and making a go of it. But you need to go with your eyes open, and I think this report, which is terrific in terms of it goes through sectors and what the biggest challenges are in the sectors, as well as just generally talking about what the problems are, is a real must-read for anyone who wants to invest in.
So we listen to the expert on India.
Seems like there are quite a few experts on India, and Bruce, you rightly has described the comparison between India and China. India is still a highway full of potholes and lots of problems and bumps on the road, but clearly there is a vision that and supported by the robust institutional mechanism that's in place that promises to make the roads smoother, and the opportunities are large. I just want to give an example, like somebody came to India or someplace, said a shoe company sent a representative who went around and saw and said nobody wears shoes here, so there is no market, and went back. And the other person who came and saw, well, there's a huge opportunity to supply shoes to this market. So now you can clearly see that all the potholes that need to be leveled out, filled and leveled out, and 101.3 billion people who are hungry for being part of the development, economic development, present a huge opportunity. The good thing about India is that it has a democracy that's very robust. It has a judiciary, financial system that's very, very robust. It may have issues of delays and somewhere corruption in pockets, etc., but they're very, very deep rooted, and there is a political consensus to reforms. So Indian story at this point of time, which has really been unleashed with the growth in the technology and service industry, promises to make India a powerhouse of business to support not only the growth within the country, but for supporting the growth in other regions of the world.
Yeah, I want to echo what Pramod just said with respect to India in particular. I mean, it is an English-speaking country. It's based on the common law system. It has a very, very strong service-oriented economy. As you pointed out, the government is implementing a huge program of reforms designed to attract more foreign investment in the country, particularly in certain areas such as infrastructure, where there's a clear mandate from the government to spend billions of dollars to overhaul the entire Indian infrastructure. Lots of reforms also focused on the education sector, and India has a very large class of highly educated, trained young professionals, as well as a very large class of consumers. You know, it is one of the fastest growing consumer markets in the world. So it certainly has plenty of things to go for it. It has also an enormous amount of challenges. I mean, I just touched upon the infrastructure, and you did as well. That's obviously a key issue. There's enormous restrictions still on the regulatory sector. On the regulatory standpoint, it's an economy that's still limited to foreign investment in many areas with lots of sectoral caps. It's a country that has to deal seriously with its tax issues, and the Indian tax authorities are probably among the most aggressive tax authorities in the world. The court system you talked about a little bit. You know, India's court system is notorious for delays. However, in India, you do get your day in court, ultimately, if you have the patience. IP, like in China, is an issue as well that needs to be dealt with when you go to India. And then the issues of dealing with government, red tape, corruption, are obviously things that are present in India. So when people come and look at investing in India, I tell them this is a great story. It's a great long-term proposal, but you have to go in, as Ruth pointed out, with your eyes open, and you cannot expect, despite all the potential and the hype that you're going to be able to make a quick return of your investment. India is a place where you invest in the long run. You have to have staying power. You have to be committed to the region. But I think if you are, you're going to see a nice smooth road at the end.
I think the issue of India versus China is obviously there are plenty of sources to get at that and understand how to play it. The thought I had in my head was when there was a comedy piece of Woody Allen playing the fastest speed reader in the planet, and he is reading War and Peace, and he's flipping pages. He's just going down page after page, and the person said, "That's amazing that you can read that fast." I said, "Well, what's it about?" And he says, "Russia." So the point about India and China is the enormity of these opportunities. From the software side, we've sold New York Life, and we've distributed our platform for 12,500 agents, more $1 million roundtable agents than anyone in the U.S. and in fact the world. So here's 12,000. It's one of the biggest accounts we could possibly get. And then they say, "Oh well, let us talk to you about our international opportunity." And I said, "Well, fine. How many agents do you have in India?" And they say 50,000. Just enormous. Same thing with HSBC. We've got HSBC in Singapore. They were saying they got 3 banks: Canara, Oriental Bank of India, and HSBC in India. 40,000. The enormity of the opportunity is almost beyond comprehension, much like a speed reader reading a page a second. In order to grasp the opportunity, you really have to go in, but go in and dig very deep. And I concur with the panel. To go in there and expect to get a quick return is unrealistic at best. What I was going to offer is just a couple of quick thoughts on really how to approach these markets. And I know Bruce was asking this question earlier, but the one thing I see, particularly being on some boards of directors, and I would say being populated on some of those boards by relatively junior people from private equity firms who maybe were not operators in their day but had been through business school and were good analytically. And the first question they get in the board meeting is, "Why can't we go overseas?" or "How do we go overseas?" and being impatient. And the first thing I see is that people are not putting together business plans. I'm not talking about detailed operating plans or strategic plans, but really enough knowledge and detail. There seems to be a push to go over and start operating internationally, and that is again naive to think that you can go in there and get a quick return or kind of drive by. The metric I use is very binary. Are you in a market or are you not in a market? And to try to do it half-baked is a recipe for disaster. And the other comment you see is that the idea that markets being monolithic, and I even look at India and China, meaning people say, "Are we going to Asia?" or "We're going to Asia," not formally addressing or recognizing the fact that there are 20 countries that you've got to focus on. It's not just the monolithic Asia, but even within China and India, to not recognize the difference between a Delhi and a Chennai as you begin to approach these markets. So you really have to dig down into multiple layers of depth, and I don't see that in a lot of the companies that would go after these opportunities. But it's also the shift from, Bruce made reference to, supply chain outsourcing and having your supply chain be international, to that next step, which is truly obviously being a global company where you can originate sales in markets, originate products in different markets, and truly trade globally rather than bilaterally from the U.S. to these markets. And I think people have to free themselves from a U.S.-centric, or at least paths leading back and forth to the U.S. rather than sourcing in Asia for Latin America or and then trading Europe and the Middle East. So that's just a quick intro.
Next question. Once perhaps you decide on a market and do your homework and put together a plan. This on, I was told to speak clearly into the microphone. Once you put together a plan, one of the first challenges that many international businesses face is finding a good local representative, a partner, an agent in a country, whether it be a sales agent or an alliance partner to work with, or professional service provider, law, accounting, etc. In my work for what's now Computer Sciences Corporation went to about 25 different countries, and in each one met a half a dozen or a dozen reps, and they all claimed to have the best relationship with the government, the best, most talented staff from the best universities, et cetera, et cetera. If someone was going into a country, just general advice on how to look for and screen and select a partner in a country. And I know that's probably promoting expertise.
Yes, this is a single biggest challenge that most companies looking to do business in India, or for that matter anywhere else in the world, face. How to find the right partner? Do we need a partner in the first place? You may have the money and you may have the experience and the wherewithal to set up businesses, but it's almost impossible for any corporation from anywhere in the world, however big that corporation is, to set up a business without local involvement. Now, in what form do you want that local involvement? There are many options. You can have agents, you can have people who can promise to take you to decision makers. Is that what you need? What you need is a comprehensive understanding of the business environment, of the culture, people, their behavior, and the strengths that you can derive from local association. That can save you time, that can make you help you make right moves, and build a business that is at the quickest and can be sustained over a period of time. Local partnerships with Indian business houses is the first option that most foreign companies look for. They select a partner in a hurry. We have personally been involved in many of these ventures where after initial association the partnership has fallen through, and it leaves a bad taste in the mouth, and each party feels cheated. So what's really the option? And I'm not advocating here my own cause, but for that very reason we kind of evolved a new process through our company, that people who are experienced and have been experienced in building joint ventures, have run business operations, they understand the regulation, and they have been through the grind of setting up businesses. If they could come together to provide support, perhaps would be a better option for large companies to partner with them than go look for business houses who have different interests, and they often try to make money off their partner than from the business. It's not really a good commentary on the state of business in India when joint ventures are done, but that's reality. It's changing. So selection of the the local partner is a very important thing and should be paid a lot of attention. It should not be done quickly. Maybe there are professional groups who can provide better support, and you can incorporate them through equity options, who can then become part of the business and help you achieve the same objective as with partnership in local firms.
Maybe I'll just contrast a little bit in China. I think it's two-pronged. I think that you want to look for other businesses that have been successful, and to the extent you trust them and think they have a good track record, that's one of your best sources of finding out how to do things. I would, be untrue to myself and the firm if I weren't to say you should also go to the lawyers to know what the legal landscape is, and there's no shortage of firms, including ours in Beijing or Shanghai. Because the other half, in fact, to pick up on what was said, is that in all of these countries things are changing, and it's evolving in terms of how they're viewing and how they're handling foreign investment. So that when people first started going to China, they were doing things almost exclusively through joint ventures. They now have, things have evolved, and they now have the wholly foreign-owned enterprise. And we're seeing more and more standalone companies going in now because they've had bad experiences with the joint ventures. They no longer have to go in with a joint venture partner. And they're feeling that if they get enough support through professionals who can help them, whether it's by helping set up accounting or legal, and they have more choices in terms of what kind of form they're going to use. And the reason they're not using the joint venture is not because they just don't want to have a partner per se, but there have been some sort of unfortunate experiences where there is not the same degree of compliance culture yet within China, I think I can say safely, so that the joint venture partner, who of course was indigenous, and the U.S. partner, the ones I'm familiar with, had conflicts and there were problems, and it could get people in the soup. So I guess my thought is good professional advice, and equally finding people who've been there already and who have a track record that can help you.
Great, and not to belabor this point, but I opened up my comments by saying you need a business plan, and people obviously refer to it. It seems so basic, and yet it's remarkable how many times it doesn't happen, where people will go off and just sort of wing it inside of countries without a plan. And it's not to say, though, that you need a 100-page document with detailed steps along the way. I think the other issue is beyond a business plan is to decide how much you're going to be exploring as the early stage of your business plan. Meaning, if you end up selling some things along the way, then that's a good thing, as long as you don't get overcommitted in some of those markets, that you can test the waters. I always see that some people go out there sometimes and start selling a product, and they start asking for orders and beginning a sales process. And there are other people out who don't really, in a sense, offer anything except market research. So they ask a lot of open-ended questions and have meetings without giving anything hard and solid for the marketplace to react to. And what I always found that's helpful is when you're in the middle, you are not doing sales, you're not doing market research, you're doing something that's a hybrid that really asks people to react to an actual situation, actual product that you are offering or are about to offer. And then you get the most, I believe, most legitimate comments. When people are asked to buy something, if you're selling, they tend to pull away. If you're just asking general questions that don't require either party to have skin in the game, you don't necessarily get the right answer either. So my comment is, when you go out there and start to enter a marketplace, have an idea about the product, but exhibit willingness to be flexible and ask for their advice and be a good listener.
I would just add a couple of practical points. I mean, clearly, when you go to these emerging markets, there's a lot of things that you would have available to you, a lot of tools that you would have available to you if you were to do due diligence in the US that you don't have in India. You don't have public records. You cannot check a number of things. So you have to be very, very focused on the due diligence of your joint venture partner. You have to go through local lawyers. You have to go through your accountants on the ground. There are some firms that specialize in doing background work, investigative work, that have on the staff, former police members of the Indian police, if it's in India, which really specialize on finding out all of the information that is not publicly available, and that as a foreigner into the country you won't be able to access on your own. So that's step number one. Step number two, then, when you structure your relationship with your partner, you have to really think about, we're getting married, but what's going to be the exit? Think about your prenup and how you're going to structure the relationship with them and the exit if things don't go well. And people should all bear in mind the story of Danone, which has been, in the press with respect to China. But coincidentally, I'm involved in a similar situation in India, where one of our clients, which is actually a French company, had invested in India with a joint venture partner that was a minority partner, and now they're in the process of literally being thrown out of the country by that same minority partner, because a little bit similar to what is going on with Danone. And that would have been avoided if they had structured proper governance and other arrangements with that joint venture partner when they went in to begin with. And then the second big mistake they made was to be hands-off. And I don't think you can afford that if it's a country that you don't know and that you're a foreigner to. You need to be present, you need to have people on the ground to work hand in hand with your joint venture partner, because unless you have your own people in, if you have a hands-off approach, and if it turns out you have a joint venture partner who may have been great at some point but then decided that he really liked the business is going well and he's going to take it over. If you haven't been paying attention, you haven't been present, you're going to be in for a major surprise.
Thank you. And I have to thank Greg for the continued plug for the business plans. One of the courses I teach is business plan development, and one of my students is here. I can't identify him only because his identical twin brothers here. I don't know which is which. But thank you for the stressing the importance of the business plan. One of the other areas is obviously getting data for that business plan can be critical. In previous careers, I worked on Wall Street trading foreign exchange, which is a crazy market, fluctuates like crazy, and interest rates. I think we all know how the stock market did. I had a chart. I did a presentation to the UN Youth Assembly, and wanted me to cover international equity markets as part of it. And I got a chart of the 10 best and 10 worst market performances for last year. And I'll just read the top three. On the worst, at number 3, Ukraine, negative 73%, Bulgaria, negative 80%, and Iceland, negative 94% is what their stock market did last year. And somewhat dismally, the best performing markets, the top 3, number 3, Morocco, down only 6%, Costa Rica, down only 4%, and number 1, the only market in the entire world that had a positive return, Tunisia, 10%. So, question I would ask the panel, given the giant gyrations in interest rates and stock markets and other GNP projections and foreign exchange values, in order to put together that business plan and really understand local economies, what are some really good sources of information to put that plan together, both internationally, World Bank, general secondary type statistics, and how do you get real good solid numbers on the ground, some kind of primary research?
Well, it's very important to do proper due diligence, and market conditions, of course, vary from country to country. You gave examples of countries where there are massive gyrations and fluctuations, and how do you make up your mind as to what's the right way. I can speak about India. Of course, India has been somewhat unique in this respect. Its economy has been liberalized and slowly, in a conservative manner. There have been more controls, but it has also helped India to remain insulated from massive market fluctuations, financial meltdown that happened. We have witnessed in the last 2 decades an Asian meltdown. India was almost untouched, and this time around also with global meltdown, I think Indian economy and Indian business remain by and large unaffected. And the stock markets also, they fell, but they quickly recovered. In fact, the last 6 months recovery of the stock market in India has been unprecedented, and nobody knows why they have recovered so fast. So the conditions can vary from place to place, but there are the information that's available on all economic indicators are well understood. This have to be gone into details, before you look at the market.
Well, we've been talking a lot about China and India. I guess I would just give a plug for Brazil and UAE. UAE was on the cusp of becoming sort of the newest flavor of the month when the crisis hit, and we all have read and a witness to the real estate issues there. It's an expensive place, we know that, and we haven't talked too much about the issue of customs, although we may get to that, and that certainly is an issue. We know that from the people that we send over from our firm, that it's even those who are the young associates who really think it's going to be terrific and want to go, they find it to be a place that's somewhat isolating for them initially, and where they need to figure out how they're going to make their life and find expats to be with. But I would say that those are both places where there is, certainly Brazil, probably more transparency in terms of the market and greater ability to figure out what it is. UAE may be a little tougher, but you may also want to therefore think in terms of where you're going. Are you going to be able to write a business plan that's based on really credible information?
I think that's exactly right. If you think about the kinds of businesses that people are embarking on when they go to international and global markets, it's not going to India to compete with Procter & Gamble. You've got scale and established companies, global companies, whether you're going to Colgate or Nokia, whoever you're going to compete with, Motorola. You've got to find your niches and sort out how you compete. And so as a result, most of us are going to be dealing with, these are going to be more either cutting edge products, new technologies. So this is the issue of doing market research. You're going out there and it's like the classic story of when ENIAC was the first computer built in the University of Pennsylvania, mainframes with lights, and it looked like the desk set with the movie with Spencer Tracy and Katharine Hepburn, this monolithic thing, and the first market research said there will probably be a market for 9 of these. The government will own 3 or 4, and then it'll be obviously way off. And the people who were talking about penetration of cell phones early on were saying that, well, at $100 a month for 30 minutes of use, obviously it's not going to penetrate the market very, very deeply. So the assumptions that people bring to this market research is critical, but that is the toughest thing. I talk to my students, and I've had about 1,200 students pass through my classroom, and I say you can learn how to model, you can learn all the basics of finance and marketing, but there are some people who just have a golden gut, and what insights and instincts they have are really have an intuitive sense of gathering how customers are going to adapt to these new products. Steve Jobs probably has it when you look at the kinds of things that they've been successful at doing and what they introduced. These are not based on market research. So you can run your models all day long, but what kind of adoption you're going to have with new technologies is the hardest thing in business, and it also happens to be the most important thing. So running models all day long. How do you get market research, and how do you break in and get data? As Warren Buffett said too, he said, you can tell me what the interest rates are going to be for the next 20 years and it won't affect what he invests in predominantly. It's mostly about buying behavior and your ability to produce and your ability to compete. So that classic analysis of who's got share, what are their economics, and how do you adjust to that. And we can, I want to belabor this point, but in most of the businesses I've gone after, it's always been about baseline competition. I want to know everything I can find out about my competitor, what their weak points are. Because when I was at Danskin, and we had fallen prior to my arrival from 100 million to 40 million, I want to track to see who had taken that share, door by door. Who got the business at Belk? Who got it at Macy's? Who got it at Nordstrom? Who got it in which class of trade? There was a shift to the sporting goods class of trade as well. Where did we lose? How are they weak? How do we get it back? And then we devised a plan to go back up, and we doubled in size over the next 3 years, and we stole it. What did Princeton Review do to Kaplan? How did they steal that market share? We went back in and understood from their customers. We did a lot of market research. We made tons of calls to their call centers, pretending to be customers because they were doing that to us. And you learned what it was about that experience. So a lot of times these are relatively pretty much zero-sum games. This is a competitive framework. You're trying to steal share from somebody or back in case you lost it in the first place. It is understanding what their product development plans are and creating a strategy around that. So you're going to assume that there is some market growth and you can get that information, but the toughest information to get is what your competitors are doing.
My experience has been primarily in the area of M&A, where you've had to come up with a business plan for the combined businesses following the acquisition. And with respect to emerging countries, one constant has always been that the budget and the plans and the forecasts always turn out to be wrong, sometimes quite significantly, and always in the negative. And the key to that problem, or a big answer to that problem, lied in the upfront due diligence that was done when people looked at the businesses and try to come up with the forecast and the plan for the combined businesses. And in countries like India, where you have several sets of books, where a lot of things are not what they seem, you have to always plan in your business plan that you may have significant variations, at least in the first few years, until you found out everything you needed to find out, which you will in the following 12 months of your acquisition, and then you'll be able to really do a proper business plan.
Yeah, I was going to add one more comment before we go on, and this whole issue of your competition. Everybody knows a story about dumping in foreign markets, and that's the other thing you've got to sort out. And the classic case is steel in Korea. So when you look at your direct costs in these markets, and then you look at your overhead structures, and seeing how people are going to be using what markets are covering what overhead and how it's being allocated, there is a huge difference between how people look at markets and how they proceed. The case there was the Koreans defended it by saying that all of their overhead was being absorbed by the domestic markets, and that they had the right then to cut their price to just over the variable cost in some of their international markets. They gained share, and as a result, that share gave them more buying power and more scale in those existing markets. So again, you've got to find out who is being disruptive and who is being rational, and trying to predict who of your competitors are rational and irrational is, again, one of the difficult things. A thing I'll point out is I'm a huge fan of Clay Christensen, and we were talking about it with Jack Bloom earlier, but here is, for those of you who don't know, a professor at Harvard Business School wrote Innovator's Dilemma, Innovator's Solution. And these are two of the best books ever written on the planet about competitive behavior. Once you get past a Drucker or a Michael Porter, this is really the best thinking on the planet.
There was discussion about all these different countries, and very little discussion with the panel on Eastern Europe. And I know that Eastern Europe is really a go-to place now for a lot of different industries. So I thought maybe if you some of you could just comment on what the opportunity is there, and whether it's a good place to go. Can they compete with India and China and Brazil, or these very large entities, and a lot of the Eastern European countries are very small. And so what are companies thinking in the way of opportunities in Eastern Europe?
I know that Greg has experience in Belarus. So the question was opportunities in Eastern Europe. We've been talking about China and India a lot. How about Eastern Europe?
Well, we did a lot of research in Eastern Europe, and we had a product, one that Sandy initiated, and then we ended up selling to Cisco, and they had mentioned that we had a nice multiple on that. When we restarted, we looked around and said we cannot do it on U.S. labor rates in computer sciences. The cost of developers and project managers is too great. That's why I said we have only 10% of our staff here in this country. The first place we went was Belarus. And at the time, this is going back about 6-7 years, you'd find QA and junior developers were working for $400, $500, $600 a month. Now it's up to $1,000 to $2,000 a month. So these are very talented people, but you take one step across the border to go to the Ukraine, and it is 2x that. So you've got to be careful about making a commitment to one country and having dramatic changes in either supply and demand, and we had some issues when we got to Belarus, because next thing you know, Hewlett-Packard was coming in, and people worried about political risk with Lukashenko. So again, we did a very systematic review of all those markets, but it was really from a labor supply, not from an opportunity. But the GDPs of those countries are climbing dramatically, that they are really looked upon as a nearshoring experience for the rest of Western Europe. So you're dealing in the same time zone. So a lot of these markets have been very successful because they're right there, and yet you fall off a cliff in the Eastern Bloc countries. The problem there is that those wages have started to normalize and approach the wages in Western Europe. So you've got to be careful. Careful, yes.
I'll be letting them
No, please. Go ahead.
I'm sorry. I just have a question about Eastern Europe. It's about Russia, which is part of the BRIC, and it's a little bit can't really, I don't want this to be extreme, but the government there a couple of years ago a little bit nationalized, let's say, the oil industry and some of the media industry, and the rules of the game are not that clear as they are in India and China. And now they're a little bit stepped back and they're letting a little bit more freedom. Have you guys ever encountered that it's a little unpredictable in Russia in terms of political stability? And the second, it relates to India. You said that there are 1 billion people, but how many educated people? And the wages there are also climbing rapidly. It's not the way it used to be 5 or 10 years ago. So is it still worth it? Let's say outsourcing.
So 2 questions. One comes on the rule of law and political stability in Russia. And the second point about, as Greg had pointed out, how the wages have increased very dramatically in some of the Eastern European countries. They are, and perhaps Pramod could address this, increasing in India, because while there's 1.3 billion people, certainly they're all not skilled in computer, C++, Linux, etc. So let me...
I'll just respond first on Russia. I think your perception is right on. I think that there, as you said, unlike China or India, Brazil, the political uncertainty is a real deterrent to outbound investment. And it's a real challenge for them for that reason.
You're right. You mentioned that the wages, the low wages, cannot be the only reason for supporting business growth and outsourcing. In fact, India is already witnessing an increase in wages. The answer to that, of course, is that there is a large number of people who are coming from second-tier, third-tier towns who are looking to get the opportunity of employment, and the challenge is how to get them trained and get the industry to move out of a few growth centers into the hinterland, and then the support can be provided. So I don't think that there is a real issue in India in terms of finding manpower at reasonably priced manpower. On the other hand, India cannot continue to rely on the arbitrage and the cost arbitrage for people. We really have to move towards innovation and higher level of skills, and use the knowledge bank for supporting growth in the service industry rather than remaining a low-cost provider of low-end services.
I focus a lot on the outsourcing industry. It's interesting because right now, if you're looking at where the outsourcing companies are buying, they're buying in Eastern Europe, they're buying in Latin America, and they're continuing obviously to grow in India. But what is happening is, because of the pressure and the raise in wages, particularly true in India, a lot of the low-cost work is now moving to the Philippines and to some other cheaper locations. So now you're going to have the Philippines focused on call centers, whereas India is going to focus on some more of the advanced outsourcing processes, and you're seeing really a push for India to become much more sophisticated in the quality of the IT services that it provides, and the low-cost services are now farmed out to some even cheaper jurisdictions.
Yeah, and the point about how important innovation is, and Greg talked about innovation, the innovator's dilemma and solution, and Japan, did so well so long because of efficiency and low cost, but in the end, efficiency gets competed away to the consumer in lower prices. So the need, recognizing the need of innovation is great.
My name is John Weaver. I'm with Liberty Imaging here in New York. We're a very small, high technology company attempting to introduce new technology and new products overseas. We've been working with the U.S. Commercial Services to explore potential customers in various countries, notably Brazil, Singapore region, India, amongst others. Those are soon to be appropriate for this discussion. We've received a number of inquiries from clients, potential customers, rather than distributors. And we're wondering whether, we're going to start debating whether it might be a better entry point for a small company without huge resources to enter a market like Brazil, for instance, through a client base, rather than trying to find the right
That is a great question. And the reason I say that is that a lot of times when companies begin operations, they say, well, we're small, so therefore we need to get distributors. And when we get large, then we're going to go and have our own sales force.
Right.
For the most part, what companies do is a blend of those, obviously. It's not either or, but it's both. However, what people have found out, and all these are sales and distribution strategies, the strategists are saying the opposite, that when you are small, you should probably favor a direct sales force because you can control your destiny, really understand the market. And then as you grow, you now know the market, and you can set up a more predictable economic sharing arrangement among large distributors. Because if you try to match up a small company and a big distributor, the question is, will they commit? They want you to prove that you've got a customer base there. So really, it really stands that strategy on its head and flips it around to say, if you're a small company, go direct first, then you transition to more indirect. People see you've got customers there, and vice versa. As the bigger you get, the more leverage you have over the big distribution houses rather than vice versa.
I would echo what Greg says from a legal point of view, based on empirical experience. And this is inbound. This is with primarily European companies who I have represented, who have come to me. We've got a distribution agreement problem, or we don't have an agreement even, and we've had this distributor for years and years. It's not working out. What are our rights? Generally, they're smaller companies that have appointed the distributor. I don't think I've ever had a really major European company come and say, we've got a distributor problem. They've worked it out because they've got enough might. It's the smaller guys who find themselves very concerned that they are not getting back what they thought, and one of Greg's points is that, of course, you lose in control. You don't really know what's going on in that market. And the problem is that because they've been working the market for you, you're stuck. Because how are you going to go back in later and then capture that market for yourself if you want to do it? So that I agree completely that going in and finding your client base first, and then they're your clients, then you can appoint the distributor later once you've had a highly developed and successful operation.
Thank you. Thank you for that question. It's a very good question.
I won't have to read your book.
John, and then the gentleman in the first row.
John Boyd Operating Alliances. I'm wondering if the panel has any thoughts about what, as the world economy emerges from this situation that we're in, what kinds of fundamental changes we can expect and which are convertible perhaps to opportunities. I'm thinking in particular with China as it begins to address its currency issues, the renminbi versus the dollar, and starts to focus on its domestic consumption versus exports, and what that all might mean to those of us who would like to do business.
I think you hit on the one I was going to mention, which is there is a huge recognition now in China and India that they have an incredibly young population that is now earning enough money that they can start creating a very powerful market, and a lot of the Indian businesses and Chinese businesses are now focusing their attention not so much on exporting their services or their products in the case of China, but really trying to service more the consumer market at home. And that is really a major shift that I see in both these countries in terms of what kind of products, how they're going to market themselves, how they're going to turn their industry. It is obviously creating also huge opportunities for foreign products. And it's interesting to see now that you can buy Harley Davidson in India, and there's a lot of products in the luxury goods area, for example, are now becoming very popular in China, very popular in India. I think I read, was it yesterday or the day before, an article in the Wall Street Journal about how China has become now the #1 market for luxury goods, which is something you wouldn't have expected. in a country like China, and Louis Vuitton is probably, China is probably one of the largest countries for them in terms of revenue generation. So you have this new group, hundreds of millions of people with disposable income who are going to buy, of course, local products, but also are going to buy Western products that they didn't used to buy before, and that is creating, I think, huge opportunities for Western companies, particularly in the manufacturing and other such sectors.
Absolutely. The domestic markets are becoming very, very significant. In case of India, for example, the service delivery industry, which was focused primarily on export, is finding huge potential within the country. Out of 60 billion of services export, 60 billion total service portfolio, nearly 10 billion is in India, and the projections are that in the next 10 years, while the exports will grow 4 times, the domestic opportunity will grow 10 times. So the markets are changing. The demand side and the supply side both are changing. The boundaries, of course, are collapsing. You're seeing more global delivery mechanism, whether the business opportunity exists within your boundaries or outside your boundaries. I think it's a matter of as the consumption grows, the opportunity is becoming big locally as well as outside. And we are finding in India, for example, that there's a shift taking place now for opportunities from just being in Northern Europe, Northern America, or Europe or Japan to BRIC countries, even some of the CIS countries, where opportunities are being explored both ways. So the boundaries are becoming blurred. It's all becoming a global supply and demand scenario, and the reliance on some particular markets is becoming less and less. New verticals are opening up. For example, so far the service delivery has been in areas of banking and financial services, or telecommunication, or retail, or travel. Now healthcare is emerging as a huge market potential, and it's not just outside. Within the country, we see that there are big opportunities opening up.
One observation. What I found very interesting as a result of the U.S. economy challenges, and the fact that the Chinese have, of course, withdrawn a certain amount of the money that they otherwise were keeping just in reserves in our treasury notes and bills, is that they've had to redeploy the money that they've taken out. And so while this doesn't necessarily affect, which market you go into as these things change, what's fascinating, though, is to see how China's taking that money and using it in effectively sovereign wealth funds to purchase other companies and other industries and resources. Most notably, Australia, of course, has recently had 2 situations in which the Chinese have purchased, or one they were successful, the other there's been pushback, of rare earth minerals that China is purchasing for its own internal purposes, and needs to go out, though, outside of itself in order to find more resources to, in fact, support its population. So it's just very interesting to see that redeployment of all those dollars.
Again, to rephrase the question, what happens in this marketplace where the economy is down, you come back out of it, and there's growth in these domestic markets? The question I always ask is, whenever I go into a company, and I had a consulting firm where we did a lot of crisis management, the question we'd always ask is, who is making the decision? And also the distinction I made earlier between international companies and global companies. In an international company, you have somebody who is in charge of a market, say the US, and you're outsourcing and you're bringing in product or service or something. There is somebody inside that market, in the US market, who is in charge of the market, or not. So the first stage is, who's making decisions? And I've seen so many companies where you walk in and say, who's made this commitment to buy raw material? Who makes the decisions to convert that raw material? Who is getting rid of the excess inventory? And the unsuccessful companies are the ones where you walk in and the answer is, not me. It's somebody else, and there's a gap that nobody is in charge. And that's what the Procter & Gambles have done so well. There is somebody in charge. So when you think about that transition from the CEO, who is the product manager of a single product company, to a multiple product company where you have to distribute that and ask people to, you've got to basically delegate those decisions. The same step has to happen when you go offshore, because initially you are sourcing, but then somebody inside that market, as we were talking about shoes in India, is there an opportunity there? Somebody inside that market has to make the decision. It can't happen from the US. There again, unsuccessful decisions there. So it's all about who is setting the strategy, who is deploying the capital, and who is making those big decisions.
I want a revolutionary strategy. Revolution, not the past. New era. What's the domestic era?
That is a very hard question.
Like the gentleman asked the question, like if you're a young small company, how do you get into the international market? Which is basically you don't have the capability and the credibility to do it, and resources to do it. And you're competing very large global companies. But I think, but also I find out that the entry point, starting capital is lowering because of the technology, smart application. So I believe agilities, and with a good strategic map, okay, with the learning we have already collectively learned, I pretty much feel that it's a newer generation of business leaders will emerge. Okay, so I want your opinion. Revolutionary strategy, abandon the, not abandon, but you identify some niche where the young, all this audience can really benefit in a practical way.
You mean in terms of industry or product? Or
no, I want to abstract in a way, yeah. Because of course, like commodity or innovative product, right? Those are spectrum of because commodity need volume, innovation need risk, right? So it's a kind of I would say it's a you want to develop a strategic map and how to invest and to play the game.
There's a
I believe Greg can handle it. Yeah.
I think so.
Yes, I believe.
I don't think I can handle it, but I'll certainly.
I mean,
Yeah.
some of the things to look at is, this new type of international firm called Born Global.
Right.
And, I think it's interesting in the Thomas Friedman's book that he points out that it used to be, a great advantage to be born in the US than to, say, be born in India. But now that person used the example of someone born in Peekskill, New York. I'm not sure why. Better to be born of moderate intelligence in the United States and superior intelligence overseas. And now that's very much leveling off. It's better to do that. And because the world, as he puts it, is getting flat. And there's a lot of advantages to globalization and a lot of disadvantages to globalization. I think what we have to realize is, just as in the United States, we don't compete in New York, we compete in 50 United States. In the world, we're going to have to begin to compete on a global market. Now, for many people in the US, that may be a disadvantage, as salaries, in India levelize with needs, also perhaps around the world are levelized. But I think it's, a recognition that we are in a global world, and it's very hard once you go down the road of globalization to turn around and to come back. And we talked about that earlier, how this idea of protectionism and all is not getting the kind of lip service it did before, and recognize that it's here to stay, and we are going to have to compete globally. You're going to have to take a global perspective. And countries like I mentioned, Japan, that didn't think entrepreneurial and innovatively, have been in a recession for 14 years, again because they depended on efficiencies which are competed away to customers. And unless you're willing to, my main area is entrepreneurship, unless you're willing to think and act entrepreneurially and add value every day, you could be in trouble. There's all different theories on strategy. Some is the resource-based theory. The more resources you control, the better. Other people, a professor at Harvard said, entrepreneurship is the pursuit of opportunity without regard to resources. And I think you're going to have to think more of an aggregator. You're going to have to look on a global scale and figure out how you can add value and innovate every day. When I worked on Wall Street, we had an expression, you're only as good as your last trade, and I think for more and more people, it's going to be you're only as good as your last innovation, and there's going to be a lot of people struggling to stay on the top. And as a professor, I believe it's through education, but I'll let Greg and some closing comments.
The question was about a revolutionary way to approach business. If you look at the failures on this planet, things like I would consider General Motors to be a grand failure. I think the common thread through all this is hierarchical decision making and a lack of listening. So if you can correct those two problems in this revolutionary world. Andre Gide had a great comment. He said, everything in the world has already been said, but we have to repeat it because people weren't listening the first time. and I think that's true. I'm speaking right now, therefore that means I'm not learning anything. I find I only learn things while I'm listening. And I think creating a culture that is competitive and it's balanced. If you listen too much and don't act, you don't get anything done. If you just barrel ahead and put your head down and don't listen, you go off on the wrong path. So there are two extremes. There's that company that will not make a mistake, and they're right here. They go along plodding, but they never make a mistake. And then you've got companies that will head in this direction and this direction, and the answer is it's somewhere in the middle. You're going to make some mistakes, you're going to be fast, you're going to move, and it's really understanding and constantly listening and delegating and building talent and allowing that talent to work. There's one last thing I'll say, and I say this, I steal this from Gary Wills, who wrote a book called Certain Trumpets. And he says in the first chapter of Certain Trumpets on Leadership, he says, what defines a leader? If you have this, you're a leader. And the answer is it's not communication skill or intelligence or any of this. He says it comes down to you need only one thing: followers. If you don't have followers, you're not a leader. So then he goes one step further and he says, well, what makes a great leader? If you have followers, makes you a leader. What makes you a great leader? The answer is great followers. So then the question is, how do you get the great followers? And if you list, I do this to my students. Before I tell them this, I say, list these attributes of leaders. And they start listing things like courage and communication skill and passion and action and charisma. My favorite, the one I hate the most, charisma. And then at the end I say, well, what do you really need? And then somebody will say, oh, okay, well, they get it, followers. And I say, okay, who are the great followers? Here, you've got 700 on your GMAT. You've taken 2 years out. You're spending a fortune to get this degree. People come to campus in a good recruiting year, not this year, and they try to recruit you. I say, you're obviously the great followers. Now what do you want? Now let's rank these attributes. And all of a sudden, they rank delegation and listening a lot higher than before. It's one thing when they're speaking about themselves as the leaders, but when they're the great followers, they want a leader who listens to them. And in reality, that's what it is. It comes down to creating this culture of people who can make decisions at lower levels, reduce the layers, keep a very keen sense of the economics. Everybody inside a company, I don't care if you're at the lowest level, you should understand what the economics are. At Danskin, every single month we would go out and the employees were fearful that we were going to source in Asia. And I said, you are going to know the economics that we in senior management are basing on the decisions. We want you to know what you're competing with. And nobody had ever done that before. So it's about driving information throughout every level of the company and listening. I think that's
Thank you all for coming, and a hand for the panel. We have